Welcome to the deep dive. Today, we're looking at something pretty extraordinary happening in the gold market. It's not just the price, which, as of October 2025, has blown past $4,000 an ounce. That's actually the 40th record price milestone just this year.
It's remarkable, truly.
Yeah, and you shared a fascinating set of sources with us. What they're showing is this isn't just, a temporary spike. We're talking about a fundamental structural transformation happening in global finance, and it seems to be driven almost entirely by one group, central banks.
That's right. They're the engine here.
So our mission today is to cut through all this data you've pulled together. We want to understand these frankly, unprecedented buying trends. We need to figure out why central banks are buying so aggressively, what the geopolitical drivers are, and ultimately, what does this huge shift mean for global finance, and maybe even for specific companies out there?
Absolutely. And look, if you've been wondering whether the international monetary system is, changing in a really big way, this is probably your clearest sign yet. The sources are pretty explicit. This pivot towards gold, it has profound implications for the future role of the U.S. dollar. What we're really seeing is an acceleration, a big one, of that whole de-dollarization idea, with gold being positioned as this kind of ultimate neutral anchor.
Okay, let's start with the sheer scale then, because the amount of buying almost makes the price itself seem secondary, doesn't it?
It really does. The consistency is key.
The sources show this incredible sustained buying spree. Central banks have been net buyers now for, 15 years straight?
15 years nonstop.
But it's the acceleration, particularly since early 2022, that really jumps out. They've bought over 1,000 metric tons each year for 3 years, running now 22, 23, 24.
Yeah, that level of annual demand consistently above 1,000 tons. I mean, that's institutional buying on a scale we haven't really seen in generations.
It just creates this massive, relentless upward pressure on the price, right?
Exactly. And that sustained buying, it's pushed the total official gold reserves globally to around 36,699 metric tons by October 2025. It's a huge number, obviously. But here's the real kicker, the insight we really need to pause on. It's this. For the first time in almost 30 years, since 1996, central banks' official gold reserves have now officially surpassed their holdings of U.S. Treasury securities.
Wow. Okay, hang on. That's genuinely stunning. Since 1996, for 3 decades, we basically lived in a world where U.S. debt was the absolute bedrock, the go-to safe asset for reserves, king of the hill. And now gold has actually overtaken it. What's the symbolic weight of that?
And the financial gravity. Oh, the symbolic weight is immense. Think about it. The U.S. Treasury bond has been the absolute pillar of the global financial system for so long. So when central banks collectively decide they'd rather hold more physical gold, an asset that pays no yield, remember, just offers security class, when they hold more of that than they do of the world's supposedly safest, most liquid government debt, well, that's a pretty loud signal, isn't it? It's like a global recognition that the old hierarchy, the old assumptions might be breaking down.
And financially?
Financially, it just shows up in the numbers. Gold's share of total global reserves has climbed sharply. It hit 24% by the second quarter of 2025. That's the highest it's been since the 1990s. If that's not structural change, I don't know what is.
It feels like more than just, routine diversification. It feels much more strategic. Okay, so we know the buying's been going on for 15 years, but the frenzy, the real acceleration, that's more recent. Let's unpack the driver. Why this sudden stepped-up buying now, specifically after 2022?
Yeah, the timing isn't random. The sources point pretty clearly to one specific event acting as a kind of watershed moment for central bankers everywhere, and that was, without doubt, Russia's invasion of Ukraine in early 2022. But more specifically, it was the Western response, the freezing of Russia's foreign exchange reserves held abroad.
Ah, right. The weaponization of finance.
Precisely. That action, freezing the reserves of a major G20 economy like that, It was unprecedented in scale. And it served as this stark, impossible to ignore lesson for every other central bank governor watching. It basically exposed a fundamental vulnerability. If you hold your nation's wealth in Western currencies or assets held in Western countries, dollars, euros, yen, whatever, those assets could potentially be frozen or seized through sanctions. They weren't unconditionally safe anymore.
So it wasn't just about, say, hedging inflation, though I'm sure that plays a role.
No, inflation is definitely a factor, absolutely. But this was different.
It was a strategic, almost defensive maneuver. Which perfectly frames this whole de-dollarization narrative we keep hearing about, doesn't it?
Hmm.
The main motivation seems to be reducing that specific geopolitical vulnerability tied to the U.S. dollar. And we've seen the dollar's share of global reserves continuing that slow, steady decline down to about 58% in 2025, according to your sources.
Exactly right. And in that context, gold becomes the natural safe harbor, the sanctuary.
Yeah.
Why? Because it's seen as neutral. It isn't issued by any single government. It's generally considered immune to sanctions, at least when held domestically. And crucially, it carries no counterparty risk. If you have physical gold sitting in your own vault, under your own control, there's no third-party bank, no foreign legal system, no political decision in another capital that can suddenly freeze it or tell you what you can do with it.
It's pure financial sovereignty, in a way.
That's a good way to put it, financial autonomy.
Okay, I see the appeal, especially if you're a country that might have, let's say, friction with the West. But here's a question then. If the goal is partly about moving away from the dollar for maybe settling international trade eventually, why gold? I mean, it's notoriously clunky, isn't it? Slow, expensive to move around in large quantities compared to, say, shifting digital currency entries. Why not something like the yuan?
Yeah, that's a really important distinction to make. Right now, it seems central banks aren't necessarily swapping into the yuan or any other currency as the primary new reserve asset, not in a big way anyway. They're swapping out of assets they now perceive as vulnerable. Gold isn't trying to be a replacement for the dollar's speed in transactions. Not really. It's serving a different purpose. It's the ultimate universally accepted collateral. It's that store of value that exists outside political systems.
So it provides the foundation.
Exactly, that foundational stability. And yes, it still acts as that reliable hedge against persistent inflation, against currency devaluation, which is something everyone's worried about right now. In this kind of volatile global climate we're in, it's seen as the ultimate apolitical safe haven.
Okay, got it. Let's shift gears then. Who exactly are the main players here? We know it's central banks generally, but the sources must pinpoint the biggest buyers, right? Who's really moving the needle and pushing this price past $4,000?
Well, leading the pack, perhaps unsurprisingly, is the People's Bank of China. They've been on this extended buying spree for years now. I think the data showed them buying for 17 months straight through early 2024, something like that, bringing their reported holdings up near 2,300 tons.
Throated holdings, right? Always that caveat with China.
Always, but okay, that's significant, clearly. But your sources also highlight some other countries showing maybe even more aggressive commitment relative to their size.
Yes. We have to talk about Poland. Their buying seems incredibly deliberate, very punchy, as you said earlier. They added, what was it, 89 metric tons in 2024 alone?
Yeah, and then followed that up with another 67 tons just in the first 7 months of 2025. Poland's activity is really interesting. Because it's so strategic and so public, they have an explicitly stated target: raise gold share of their national reserves from around 20% up to 30%.
That's a big jump.
It is. And putting that target out there publicly sends a really clear policy signal. It says, we are prioritizing gold. This is a core part of our monetary strategy now.
Okay, and then there's India, another huge economy, obviously. They've been steadily adding too, now holding over 876 metric tons. But the move that really caught my eye from the sources was them repatriating about 100 tons of gold from the UK back to India in 2024. Why bother physically moving it? Isn't a vault in London just as secure? What's the significance there?
Well, that move speaks directly to that counterparty risk we were just talking about. It's the physical manifestation of wanting total control. See, when your nation's gold is stored in a foreign country, like at the Bank of England in London, which holds gold for many central banks, technically, legally, it's subject to the laws and, in theory, the potential confiscation powers of that host country.
Even if it's earmarked as belonging to India.
In an extreme crisis. Who knows for sure? So by physically bringing those 100 tons back home onto Indian soil, India ensures it's completely under their sovereign control. It removes even the theoretical possibility of a Western government freezing it or imposing restrictions. It's the final step in de-risking.
Taking it completely off someone else's potential chessboard.
Exactly. And we should stress, this isn't just the giants. You mentioned Turkey. They added 45 tons early in 2025. Kazakhstan is a consistent buyer.
Even smaller central banks, like the Czech National Bank, aiming for 100 tons by 2028. It really does seem to be a global trend.
It is. Which brings us back to that transparency issue you touched on with China. The sources were quite clear that there are likely significant volumes of unreported central bank buying happening. Some countries might deliberately delay reporting or maybe obscure their purchases, perhaps to avoid moving the market too much or signaling their strategy too, obviously.
So the official numbers might actually be understating the real scale of this.
It's quite possible, yes. It raises questions about accountability for sure, but it also suggests the true institutional demand might be even stronger than the already impressive official figures show.
Okay, let's connect this back to the real world, to business and, potential impacts for you listening. When gold cruises past $4,000 an ounce, it's not just an abstract number for economists. It translates into serious money for certain companies. Who are the obvious corporate winners here?
Well, the most direct winners are, of course, the gold miners themselves. It's simple economics, really. The price of the stuff they dig out of the ground goes way up, but their costs, labor, energy, equipment, hopefully don't rise nearly as fast. So their profit margins just explode. It's an immediate, very powerful wealth transfer directly to them.
And you can see that reflected in the stock market data you pulled,
Yeah.
right?
Yeah.
Big producers like Barrick Gold, Newmont, they're doing very well. But the leverage seems even bigger for some of the smaller junior exploration companies, like Rush Gold Corp was mentioned as an example. The whole mining sector, apparently up something like 135% year-to-date in 2025. That's just like a staggering return.
It really is. And it's not just the miners digging it up. The whole financial ecosystem around gold benefits, too. Think
Yeah.
about gold-backed ETFs, exchange-traded funds like the big one, SPDR Gold Shares, symbol GLD. They've seen huge inflows of cash. Your source mentions $17.3 billion flowing into GLD in September 2025 alone. Yeah. And then you have the streaming and royalty companies. These are the firms that provide upfront financing to miners in return for a slice of their future gold production. The value of their deals, their underlying assets, goes up instantly with the gold price, but they don't have the operational risks of actually running a mine, so they benefit significantly too.
Okay, but let's play devil's advocate for a second. This whole central bank buying spree is tightly linked to de-dollarization, as we've discussed. And one likely long-term consequence of successful de-dollarization would presumably be a weaker U.S. dollar overall relative to other currencies. How might that create problems or headwinds for other parts of the corporate world beyond the gold sector?
That's a really important counterpoint. It definitely creates complexity, especially for big multinational corporations based in the U.S. A structurally weaker dollar means that when a U.S. company earns money overseas, say in euros in Europe or yen in Japan, when they convert that foreign revenue back into dollars to report their earnings back home, those earnings might actually look smaller or grow slower purely due to the currency exchange rate.
So your international sales might be strong in local currency, but look less impressive on the U.S. income statement.
Exactly. So while the gold miners are celebrating, other multinationals that are very sensitive to currency swings could face some real challenges to their reported earnings unless they're very good at hedging that risk.
Okay. But focusing back on the gold outlook itself,
hmm
what do the central banks themselves expect? Are they planning to keep buying?
Oh, absolutely. The consensus among the central banks is incredibly bullish on gold, according to the World Gold Council's 2025 survey data you found. Get this. 95% of central banks surveyed expect global gold reserves to increase over the next year. 95%.
Almost unanimous belief the trend continues.
And maybe even more telling, 43% said they plan to increase their own country's gold holdings in the coming year.
So nearly half of them are actively planning to buy more themselves. That's about as strong an institutional confirmation as you can get, isn't it?
It really is. It signals this trend isn't perceived as being over, not by a long shot.
And analysts are scrambling to keep up, right? Forecasts are being revised way up.
Yeah.
You mentioned predictions for gold to average, what, $4,150 in 2026?
Yeah, $4,150 average for 26, with some analysts even targeting $4,900 by the end of that year. These are big numbers.
They are.
And the longer-term view really reinforces that structural argument we've been making. The sources project this central bank buying trend will likely continue for at least another 3 years. They expect annual central bank demand to stay very strong, somewhere in the range of 500 to 600 tons per year.
So that creates a really solid floor under the market.
Exactly. That consistent institutional demand, it absorbs a huge chunk of new mine supply each year. It provides real stability, even if you get short-term sell-offs from more speculative players.
Okay, so wrapping up this deep dive, the main message seems crystal clear. This isn't just another cyclical bull market in gold. The sources point to a genuine structural shift driven by central banks themselves. Their demand is creating this incredibly strong fundamental price floor by soaking up so much supply. It's acting as this powerful multi-year tailwind. So even if we see corrections, and some analysts apparently expect potential pullbacks of 10–15% along the way, the underlying foundation supporting gold prices seems stronger than it's been in, well, decades.
I think that's exactly right. And that sustained buying, that shift in reserve preferences, it really signifies a massive collective vote of no confidence, doesn't it? A vote against the prevailing system, the fiat-dominated, dollar-centric system that can be and has been politically weaponized, the system that's defined the last 50 years or so. And this buying spree, it just accelerates the move towards a more multipolar financial world, a world where gold seems to be reemerging, not just passively sitting in vaults as a store of value, but, as some sources suggest, potentially even being used again, in some limited ways, as a practical means of settling large international payments between certain central banks.
Right, gold moving back towards its historical role as actual money between nations, not just an investment.
Moving back towards being a foundational monetary asset, yes.
Fascinating.
It is, and maybe this structural reshuffling leaves us and you with a really provocative question to keep tracking. If this sustained central bank buying continues to fundamentally reshape global reserves, if they keep prioritizing neutrality and physical security over yield and convenience, then what role might politically neutral assets play in the future? We're talking primarily gold here, obviously. But could it also create space for other non-state neutral assets, perhaps even emerging digital ones like Bitcoin down the road? What does the actual structure of a new international monetary architecture look like if it's built more on neutrality than on the dominance of one nation's currency? That shift away from dollar hegemony towards something more multipolar and neutral, that feels like the really big financial puzzle we'll be watching unfold over the next decade.